All right, it is 9:43, and joining us in studio with got his brand new Lone Depot polo on here. Eliot Rodriguez with us this morning. How you doing, sir?
I'm doing good. Good morning, Roswell.
Well, it's a Monday morning, and everyone's wondering where their money's at and all that good stuff. So
You ain't lying. Everybody's really going on that right now.
yeah, it's. I would imagine you probably are dealing with clients that are kind of all right. What do I need to do? Are we okay still? I imagine you're doing a lot of that right now.
I get the phone calls. Hey, the rates went down and this and that, and like you and I spoke about.
Yeah, this is all coming. We knew this was coming at one day.
The rates are not going up and down like they thinking. It's more like it's costing more, it's costing less, you know. And I guess the rates will get in the positive this week or for a few days, and then it goes in the negative again. So the rates are not technically itself going up. It's just the cost of it.
Gotcha.
You know, because remember we spoke about what the Fed did with the 75% basis points,
Sure,
raising the ceiling for the interest rate itself. Okay,
and the idea is to kind of, in theory, to curb inflation. That's kind of the theory. Now, you can have financial experts argue till now and next Sunday on whether that's a good move or not.
Correct.
But that's the reason they've done it, and you know whether it's right or wrong. Well, we'll have a debate in a finance.
We'll get to see.
Yeah, college classroom talking finance and ethics and all that.
The whole point was that they were gonna open the whole country at least 2% breathing room from the inflation that's going on. You know, so is that really taking place? We'll see, because they're still messing around trying to buy more bonds and all kinds of stuff, trying to figure out how to keep it at bay, but
sure,
that's a big animal that is kind of difficult to control if you think about it.
Sure. So. But for the most part, at the end of the day, though, when it comes to your atypical homeowner, really doesn't change a whole lot.
It doesn't truly matter.
Yeah.
Like you and I have spoken in the past. I mean, the facts are the facts. If you were qualifiable for $350,000 home, maybe you're qualifiable for $325,000, $330,000,
sure,
$315,000, depending on the situation. Everybody's different.
Sure.
Okay.
Those numbers will change.
Just change a little depending on what's happening, depending on what's costing you. To be honest, everybody's still going for the same numbers and the same stuff that they're going for.
Sure.
My job is to make sure that they don't go over what they're supposed to and keep it at bay,
and
as best as I can.
And none of that changes in this world. That's the thing. And this is something that Eliot and I have talked about almost every time, is just because you're approved for $350,000 does not mean you need to look at every $350,000 home on the market.
Or $375,000.
Yeah, or $375,000. Ideally, you're thinking, okay, $350,000 is my ceiling, but that's Eliot telling you, look, I'm going with the numbers here and seeing this is what the number that you're at. But what do you want to do with this? Are you want to get furniture? What's your other plans? Because you can get. I got you in a $350,000 house, but if that ate up all of your wiggle room, now you're going to be living on cardboard boxes or having to take the bus to work because all your money's tied into house payments. So
I don't like the idea when somebody buys a house that they're completely 100% broke.
Sure.
Okay. That doesn't mean you cannot buy a house. I just think it's not the best, course of action.
Live within your means.
Yeah. Try to be having a little. That's what we always talk about, reserves. Okay. And that's important. And guess what? Everything is tidying up in a way that almost everybody needs to have a little reserve.
Absolutely.
Okay? Because everything is tight. Now, in the end of the day, the problem that we have is every time that the market is so, all over the place that is crazy because, I don't know if you noticed, homes are going into the market and they're getting more expensive or more expensive.
Yeah.
Now the trend is changing because now they're coming back. Okay.
Demand's going down a little bit.
It's going back because not everybody can go that high.
Yeah.
It's already happening in Albuquerque. Okay. It's not affecting us so much, but I can see a little the trend happening here. But I think it's going to still continue to go up a little more still, but that's the thing that we need to keep in mind, that if you are approved to this much, and especially if your lender is telling you, hey, this is your max, don't come back and say, hey, I'll find a house for an extra $25,000 or more. I mean, now you're pushing the limits. Then I have to figure out things for you to make it work. and that makes it tough for everybody.
Yeah,
you
let
know?
me ask you this question and go the other. Are we in a market now? Are we living in a world where you have to be more careful of being upside down? And what I mean by that is,
That's a good question.
when you buy a house before and you pay with these super low interest rates, odds are pretty good you're going to get your money back one way or another. You know what I mean? You're not buying a house that you're paying more for now that you're in essence not going to pay as much for 10 years from now.
Mm-hmm.
Are we getting in a point in the world here where these prices are going to a point where if you're paying for them now at this rate and you hold on to it, you may not get that? I mean, are we in that point where you're spending too much for a house now than the real true value of it is because of supply and demand and inflation and whatnot?
No, that's a very good question. It's a possibility.
Mm-hmm.
Okay, we'll see how the trends and how the market continue working in the next 6 months to a year.
Sure.
Okay? You remember back in 2007, okay, it wasn't as quiet like it is now, but you saw how the spike on the prices of home went.
Sure.
Okay, I remember buying a duplex, which I sold not too long ago. That I bought it for $185,000 at the time, and it appraised at $195,000.
Okay.
But I bought it on the top of the market.
Gotcha.
Okay? Now, I refinanced it when I moved in town. So I did this when I wasn't living here yet.
Oh, gotcha. Okay.
And that's when Flexi and all that nonsense was going on, and like, hey, there's plenty of rentals and fully furnished that need to make some money, which is still going on, by the way. We just don't talk about it.
Right.
Okay. It's actually better than it was 2007.
Is it now?
Yes. It's just there's not as many people as doing that because, as you know, the government have changed.
Sure.
How many people coming over here?
Well, and there's trendy ways to get quick bucks.
Exactly.
And it was a trendy way.
And that was a little out of control at the time.
Yeah.
The difference that is now is that it has gone so high, but there's a lot less. Okay, and they have their facilities that they build over there in Artesia, so there's a little less people that need the places, but people still commuting back and forth to Roswell,
sure,
and still renting places, and they're renting it. I think it's almost double than what we were doing before.
Because of the lack of housing markets in Artesia and Carlsbad, Roswell benefits greatly from
That's a fact.
Yeah.
So saying back to what we were saying on the 2007 when I bought that property, I moved over here on 2010 or so. Before I moved over here, I wanted to refinance my loan because I had a first and a second. Okay. And that's going to come back. Like I said, our companies already have a line of credit for, things like that because the rates are so high. So people can still do some of the things that they need to do without having to refinance their interest rate that is low that they have right now.
Mm-hmm.
Now, what's going to happen is in the future, if you have a first and a second, maybe you could refinance and put them together at a better interest rate when the market gets better.
Kind of consolidate.
Yeah, consolidate it because it's a good idea.
Sure.
I think you and I even talked about, years ago about having a line of credit is always a good idea. Anyway,
absolutely.
So why not? It's your equity you have.
The best thing you can do for your credit is to have credit and pay on it all the time. Because at the end of the day, a credit report is basically a reputation report. Is all it is.
Really is.
It's just saying, it's telling people that you're trying to ask for money to say, hey, can this person is good for it? Is this person good for it?
Mm-hmm.
And if someone's sitting out there with an 800 credit score, they're like, yeah, this guy's probably pretty good for it.
Gotcha.
But if you're floating around with a 500 credit score, they're like, I think this person intends to, but that doesn't know how to manage a checkbook or
exactly.
and so next thing you know, I bought a house and then I just bought $1,000 microwave, and this next thing you know, I don't have my monthly income is $5,000, but my outcome is $10,000. So
right.
You're like, wow, I made $5,000 a month. That's pretty good. But if you're spending 10, it ain't so good, is it? Yes. And that's at the end of the day, that's what your credit report is.
Exactly.
Is a rudimentary.
Yeah, you have to keep it strong, and you have to be careful some of the things you do.
Yeah.
There's nothing wrong by paying debt. Okay. Now be careful how you do it. If you're gonna pay debt and you're buying a home, make sure how you do that, because if we haven't put your credit yet and we're not there yet, you may just lower your credit score before that, because it's a crazy formula when it comes to credit, because it's like Chinese,
Sure.
And I don't speak Chinese, so it's kind of hard to even translate that because it's tough. Because
Absolutely.
you could pay stuff up and then your credit score goes down. It's going to come back up, okay? but it depends what kind of stuff do you pay. Do you pay a credit card? Do you pay a installment loan? Depends that. So when I refinanced the duplex, around close to 2010 before I came over here, it took forever. Okay, and I remember when I was in Colorado Springs and that I did loans in 2 and 3 weeks. And here I am, talking to this guy doing a loan for me, from a local banker here. Which I actually ended up working for afterwards.
Small worlds, right?
I know, small world. But the thing is this, they were taking forever. And I was actually paying up a second to make it a first, okay? And I wasn't adding any debt to it. I was literally just making it, and it took forever still.
And you're kind of like, look, it's not, juice ain't worse than my screws. You keep making me pay on these things.
I even called his office. I remember telling them, I closed deals in 2 and 3 weeks. What are you guys doing,
Right. I've knocked thousands off this loan I need now because I've been paying.
So when I was here, okay, after I made it a regular deal, because I was doing and this is also coming back for investment mainly. So guys out there, when I'm talking about no interest loan onlys, don't do that to yourself when you're buying a house. If you don't have to, please don't do that. But for investors, that's a perfect tool.
Gotcha.
Okay, because if you're buying a home for 3 or 4 years, okay, and you have an interest loan only.
Sure.
And you're planning to sell it, and you're planning to invest, fix it up, all kinds of different things.
You don't plan on holding it for 30 years and all that.
That's a different story.
Yeah.
So be careful because that's coming back. Actually, that's already in place in some places already.
Sure.
Okay. So be careful with those. But when I refinanced it, I remember the guy telling me, it came this low and this and that. And I tell I'm not trying to say names because it's not a good thing anyway. But, so when the loan officer told me, it came at this low number, blah, blah, blah. I said, no, you need to go and find another appraiser and appraise that again because that's the wrong numbers. Okay, because that's just crazy. I literally bought it for $185, and they would literally tell me that it came at half the price. I'm like, that's impossible.
Yeah, okay? That's a huge
even with the market going sour.
Yeah,
that's not true. So I finally got them to understand it and took care of it and got me another appraisal, and it came at $185 from $195. Now, that wasn't so much of a hit because I was still, for what I at least bought it, okay?
Right.
But I saw the trend changing, and other people around here that knows on 2006, 2007, when it was the spike of prices on homes around here, if you were selling homes on 2010, 2012, now for some reason, the prices were way higher. They were pretty much about the same, if not less.
Yeah.
So, yes, we have to be careful with those. Is it going to be as, like that, or is it going to be worse? We don't know that yet.
Yeah.
Okay. But as long as you did the right thing for yourself, okay, and you don't spread yourself too far or too thin, if you may, then you should be okay.
Yeah.
You know what I mean? But yeah, that's a good question. That can happen.
Yeah.
Okay.
It was harder to do that a couple years ago. It's easier to do that now if you're not paying attention.
We are kind of at the tip, of the prices, and like I was saying, I'm seeing a trend.
Sure.
That they're coming to price, or maybe coming a little less, and then some come higher because it's still going back and forth. All right, just the same as the interest rates are going back and forth as well. So if you start looking at both of those things, they go hand in hand.
Absolutely.
And that's just the way it is.
Yeah, and that's the difference between investment property owning and owning a property for you to live in.
Exactly.
And that's, owning your home, you're going to make money on it because odds are you're going to spend more than a couple years in it. You're
Correct.
thinking, I'm going to spend 10 years in it or 20 or 30, depending when you get that. So you buy the home in 1995 and then you sell the home in 2010. It's going to be more expensive just because things cost more in 2010. So you're making that. But by the way, that whole time you're paying off that loan, that's building up equity. So you've paid all that off.
It gives and take.
So in 2010, when you sell that house, it may be worth 30, 50 grand more than when you paid for it.
Exactly.
But now you get all of that in cash, basically, to say, well, if you paid off the house or you paid 3/4 off in that time, now you got to take whatever you made, that 50 grand more than or 30 grand more than what the house is worth, plus all those payments you've been making, and now you've in essence got 100+ grand in equity there that you can put towards your next house or use it back on yourself or whatever it is. It's your money. It's yours to do what you please with.
I remember the The feds and the government, okay? And guys, when I say the feds deal with something that we deal with directly, and the government is indirectly.
Yes.
They say that they're not involved, but they really are involved.
Oh, yeah.
Okay? Because if that was not the case, we wouldn't be having this conversation right now.
They're very much involved.
They're very much involved. It's just the two looks and the way everything goes.
Absolutely.
But you have to understand what they're trying to do is control, the market, and eventually they'll do so much that they'll bust it down and we'll drop in prices and drop in interest rates again.
Yeah.
It's one of those things,
At the end of the day, it's like trying to control a riot with a couple of sticks moving them. You know what I mean? It's really hard to do.
You need the
with
water pressure tank and the big shields and everything to be able
exactly.
to do that.
Exactly. You need the better stuff. But we're running short on time here. But if you are looking to buy or sell or buy a home, really more, even
sell, because
even
if
sell,
you're going to sell,
maybe
you want to buy another place.
Yeah.
Because it's going backwards. It's growing to a bigger house.
You know what? That's true.
Downsizing to
if you want to get a look at your numbers and everything and see what kind of you're looking at when you buy your next house, it can help to navigate all that. And of course, probably not a lot of refis going on right about now, but
you'd be surprised.
But
which is weird.
He can help out with all that too. So.
It's like where they're coming from, it's still happening.
Sure.
Because there's so many reasons for them to happen.
There is true. I always think you're trying to lower your payments, and that's the main reason for most, but that's not always
But
the
believe
case.
it or not, even with the interest rate going higher, people still, refinancing to lower their payments because there's many ways to do it, like paying some stuff off.
Sure.
Now you don't have no PMI. I mean, there's so many different ways.
Every situation's unique. That's why you need to talk to Eliot.
Exactly. Because imagine if you're able to accomplish that, and then when the market gets better, you can refinance it even lower, even more.
Yeah.
So win-win in different,